holdings. So whatever the strategy we have taken, so currently where it is standing, let us have a look on that. Morning I have given that Excel. So ETH, now it is few minutes back it was 3189, now it is 3180. Yesterday we have been trading at some 115 profit. We are now 120 profit ETH strategy, which we are tracking from 3rd November. Then coming to the daily yield strategy of December, 1,08,000 call and 1,02,000 put ratio spread, 1.5 times we have bought, 100 we have sold. So this is at a loss now. So at 21st we have sold, but yesterday if you compare, $315 loss was there, and today it has reduced now. The losses which was yesterday around $315, it has reduced. Much changes is not there. So 96,000, 95,800, that level it was there, 96,100 level now. So not much changes, but it has reduced because of the fall here, and it was a 10,000 level, it has fallen. So because of that, this losses has reduced, and slight bounce back above 1 lakh, it can again go back to the profit. So similar way for the Ethereum, I have shown you the live position here. So here too also 3,500. So 345 I have sold it, and here too also you can see that already. So $35, 21st November, I have already sold it at $35. So this is also there, and other positions as it is. So it is 1.5x, it is there, 3,400 put, 3,600 call, it is there. So now this is the new strategy we took yesterday during the program. So that this is not a daily yield strategy, we'll be waiting for slightly higher level, then we can book the profit. So here January series we have gone into. So January series we have gone into 85,000 put. Now it is 3,500 level, we can get 3,500, and so here too also 1 lakh strike call, we have 2x we have purchased. This is 6,800, almost 6,800. So 6,800, and the future is we have sold it. So I think some computation error here. So we have sold the future. So that means it should be F4 minus this. We have sold the future. So here, what is the 96,122? 96,122. So this is level we are there. So $19, it is in loss. This is a strategy. We need to come out once it is going for 1,03,000 to 1,04,000. So this is what daily yield 3 strategy, one new monthly strategy, this 4 we have taken, and this is the status. First one, since it is continuing from 3rd November, it is at $120 profit. Second one, it has gone to the profit. The first incident means here when we have shifted from 13 to 14, it was at a profit. So deep correction happened, we have moved to the next series, but we are not daily strike, we are not selling, we have gone to 21st strike. So this is also there, and this is the 3rd daily yield strategy. This also gone to a small profit, and not small profit, 6 to 7,000 profit was there. So we have now changed it, and it is at a $77 losses. So this is the monthly strategy what we have discussed yesterday, and we have taken yesterday during the program. So these are the 4 strategies I have told you. So yesterday also I have told you one more thing. So when you will see this recording, I will request all of you to go through this recording time and again so you can understand in a very good way. So here, coming to the first part of my you can say it is advice or it is a request or it is one of my understanding. Certain strategies cannot be taken in scale. In scale, in the sense, cannot be taken in the big quantity. Like with the ratio spread, we cannot take it in the bigger quantity. The reason is this ratio spreads, whenever we are taking, though it is only options it involves, but it has a greater deal of non-flexibility. Means it is depend upon IV, it is depend upon its the movement. Many things are involved in that, so you cannot take it in scale. Big scale you cannot take these strategies. Though daily yield you can do in that, but 150, 200 lot it is much higher. However, whenever you go with the future, daily yield with respect to the future long or future short, better be in the long side. Why buying the future and selling call with the put, it is better? Why I have not told the ulta? Means selling a future, selling a put and buying a call. Why? Can anyone will tell me? The reason is always if you see in the crypto domain, call option prices will be higher. Suppose if I am going for 18th of November, so 3,100, it is at the money call. You can see here, it is 70 to 73. The premium is trading here for 18th, but here some $4 to $5 more. Always you will see 17, you can see 16, you can see even 16, you can see. So 30 to 29, or you can go for 200. So both are out of money. So here 23 is the premium. However, it is having 14 points as its 14 points as its intrinsic value. So if you less 14 points here, 24. So this kind of mismatch always you will get. So out of money or just in the money, you will get always some $4 to $5 more in the call side. So for that reason, better have a arrangement with the buying of future with put long and call sell. Second part I have told you, and again I am repeating. So if it is one lot of future having one put option and one call option to sell, it makes sense. However, if you go for a bigger quantity, say if you have 25 ETH, 25 ETH is not a bigger quantity at all, because if you are trading in the Nifty 2 to 3 lots, 4 lot, your exposure is in near to 1.5 crore. But here 3.5 lakhs contract, so 75 lakhs contract value will be there. But higher degree of you can say risk involved here because of high volatility and all. So this time I have told you, you have a double hedge. Means you will have a just in the money put option hedge, and you will have a deep out of money put option hedge. Say in this situation of 3,200, so November is almost mid. So if we are going for now, we can go for, because every day we want to also better December or January contract we can buy. So we can have some 3,200 or 250 put option now if you form based on the ETS price of 3189. So you should have 3,200 or 250 is the better put option December or January buy, and you can just less it down some 10 to 15%. So 10% comes to 300 rupees. So you can say 2,900 put option also of the same December or January. You buy one more lot. So double hedge you can have, and slight flexibility you can give and go on selling the call option. Same way, once the price goes up by 10 to 12%, change the put strikes, take the put to the higher level and continue again selling with the same call options. So this has a good potentiality. Same time, losses when it will come, when it will have a very rapid, quick, one day itself 10-15% it goes up. So in those kind of situation, you may land in losses in this kind of double hedge. If you have, you will have losses. But that time also you need to, you can recover back, because after, don't be in hurry, let it go up by some 20-25%, then you adjust your put. So once one dip comes, you can get back your money. So we have also understood that it is a high volatile instrument. It needs to be handled in a different way. You should not trade in crypto the way you trade in the index or you trade in the stocks. Same way you should not trade in crypto. And one thing remember, if you are following the stop loss mechanism, many of the people, those who follow the stop loss mechanism for doing the intraday trades and all, if you use it in crypto, it will be a utter failure. It will give you big punishments. So that is also there, because it never obey any of these methods sincerely. So certain technicals you can use, but that also having, whenever you go with the stop loss, this instrument is very naughty instrument, so it will definitely punish you. So it is weekend, that's why it is sitting quietly, but once Monday comes, you will see a different picture of this particular instrument. So these are the things you have to be very careful here. You should not treat this instrument like your stock and index. I have given the reason for that. So whenever you are going for your stock or index, Nifty index or any stock, hardly you will get, majority of the time 10-12% volatility you will get. IV will be 10-12%. Sometimes it will be below 10 also, it can fall. So to get 30 or 40% of IV in any of the options in index or stock, it is very rare. 10% of a year you may get. If anything happens very bad to the nation, very bad to the economy, that time you may see. But this is an instrument like BTC or ETH or any crypto. There, this is 70% of IV. Yesterday we have seen 100% IV. So 70-80% of IV, 100% of IV is a common factor here. Very common here. So you should not get surprised that it is 70-80 and all. So throughout the year you will get this 70-80, 50-60. So this kind of IVs will always be there. So volatility, if you compute real-time basis or through historic process, these two also will have a very high grade of volatility. Reason it is a unregulated instrument, it has a global presence, it has 24-hour of market, it has zero fundamentals. All these things I have told you. Only use case is there, but zero fundamentals are there. So it is not a company or industry which gives you the profit every quarter or every year. So it is a different asset class, which is very high risk asset class, and you may not be get surprised if it is from 3,100 it fall down to only $30. It is also possible. That can happen within one day also. From here 3,100 it can go to 7,000 also. This is also possible. So anything is possible in this crypto domain. So for that reason, sometimes you have to trade in a different way. So that is what I told you. So coming back to our strategy. So strategy is what we have taken. So if you just go back to the strategy here, first strategy when we took, the ETH was 3,700, and yesterday we have seen it has come down to 3,100 below. 3,080 level also it has come. So we have seen such a volatility from 3rd November to 13th November, hardly in 10 days time. Such a big correction it has happened. So in earlier case, I have told you, when we have initiated this strategy, we had 3,800 call sell and 3,800 put sell. This 3,800 call sell also we repeated twice. But then after there was a correction, we have booked the profit in 3,800 put. So brought back to our put to 3,400. The same action why I have not done when it is gone to 3080 level. So this level when it has come, I could have brought the 3,400 put down to say 3,100 or 200, and I could have sold some other call option. That also I would have done. But why I have not done that? The reason I have told you yesterday, when I have entered this strategy, that time my IV was trading, or the IV of the longest expiry option, which was 3,400 or 3,800. It was at a level of 70, 73, that level. But yesterday we have seen this fall invited very high IV 80 to 90. Now you can say we have again come back to our original IV position. Slowly, steadily, if it fall down to 3,000 and my IV maintain in the same 68, 70, then I can bring my puts down. Currently, you are seeing the IVs are 68, 73. Weekend, Monday, if I can say that if the same IV maintains and price goes to 3050 or 3080, I'll bring my put to 3200 level. That time I can do it. Similar things also I told you here. So when we have done for this ratio spread, same thing was there. The BTC was around 3840. So that level of IV was there. But suddenly, once that correction happened, it has gone. Yesterday it was in the 60 level. Today being the weekend, it is slightly reduced, or 3840 level it is trading now. So now you can say that if this IV maintains, because though I have sold for 21st, I did not have to worry till 21st. So if the price maintains in this range, you can say 96, 97, or in the same below 1 lakh, if it maintains till 24th, and IV maintains the same level 41, 42, then I will accept these losses and I will be changing the strike. I will change this strike to 97,000 call and put I can sell, and I can go with the time say 1 lakh or 95,000 put with 1 lakh call I can go for. So everything depend upon when we enter. To summarize this again, I will repeat, when we enter the strategy, whatever the IVs are there, if the price action goes against us or price action penetrates the boundary price points what we have thought that it will have a consolidation in this band, it did not happen. It has penetrated those band with the IVs maintaining same or volatility maintaining the same level, hardly some 3 to 5% up or down. You can change the strike. You can completely destroy this strike or completely change this strike and go with the new strike. But if this doesn't happen and your IVs are much escalated level, that time you should not disturb this strategy, continue with the same strategy. The reason is IVs and price are inversely proportional. So IV or volatility and price are inversely proportional. So inversely proportional means volatility goes up, price will fall down. So that is the range. So we have a ratio spread. So what happens if the correction happen, higher IV, further deep down, because now it is 96. So till 21st we are holding. On 21st, if we are saying that it is coming to 85,000, what will happen? This ratio spread alone can twist the entire situation here. Twist the entire situation here, and this will make us profitable also here. So yesterday we have seen $315, now it is $267. It doesn't happen. Go back to 1 lakh plus, then also we are going to make money, or 1 lakh 2,000 plus. Then we can post 21st, we can keep on selling our daily expiry and start making good money. So this is also possible. So everything depend upon your IV situation. So do remember, when you enter this strategy, along with the strategy, take a note of the IV at which you are entering, just for your understanding, to keep a mark, to keep a record. Say, or remember it, when I am entering this strategy, I am entering at a 68% of IV, 70% of the IV. IV has not fallen because it is weekend, 16th and 17th are weekend. So 16th you are getting some 48, 49. 17th it is escalating higher. 18th again it is going above. So BTC also you will get the same feeling here. So 16th very, so very low IV you are seeing here, and 17th also you will say this. But Monday, if you go to the Monday, it is in the still escalated level, it may go up also. So these are the things is very important to understand in a strategy. IV is very important, and you should know which strategy should be taken as a scale up, which you cannot scale up. So this ratio spread type of strategies you cannot scale up. Future related strategies you can scale up with 2x hedge and all. So call sell is recommended. The reason is call will have always somewhat higher premium as compared to the put. Second reason is whenever the price rises, it never fall back to that old level. You can say that Corona time index has come to 7,000 level, 7,500, 7,600 level it has come. In 2000 subprime, our Nifty has come to 1,800 level. Which how many times it has again come back to the 1,800? How many times it has come to 7,600? It is not ruled out, but similar Corona type of situation should be created, then it will have a fall. But that time it may not come to 7,600. If your base is now 25 plus, that may some 60-70% fall may happen. So whatever the price it climbs, it never falls back because it has a inflation parameter, participations, depth, people's involvement, money involvement, everything takes a step there. So these are the things also is very important, how you should handle your daily yield positions. So these ratio spreads, I told you why it should not be scale up. The reason is these are very fluid positions, very fluid positions. So what happens? Sometimes the crossing of these boundaries is common. So we have fixed a boundary 1,08,000, 1,02,000. It may cross 1,08,000, it may cross 1,02,000 also. So in that case, we may land in the losses if we have not earned sufficient money. Suppose we have earned in the first case 13th we have earned near to $143. If 14th and 15th also we have earned similar kind of 150, 153 4 days, if we have earned, then we would have not come back to this kind of losses. So only one day we earned, then after the situation changed and we have to carry the position in a negative return. So for that, these are not scale up models, but this is very good for smaller trades. If you take smaller size trades, these are very good. So these are the very important steps you have to take. And do not think that daily yield is only this one. Do not have a thinking that only daily yield means this is the position, only these three only you can take. No, you can take a butterfly also, that is daily yield. But how to make it daily yield? Whatever the selling component is there, make it the weekly option sell or daily option sell. All buying component you can take it in the monthly options. So whenever any strategy having a selling side and buying side, the selling side you sell the weekly option or monthly weekly option or daily option, and buying side go to the monthly option. So if you change that, so every strategy can convert to a daily yield strategy. So provided for at least for 3 to 4 days, the strategy should consolidate between a band. So once the strategy consolidate in a band, you can do very good business there. This is one part. You can have box spread also. So box spread also you can have, and in that also you can make a very good money in the daily yield. So that is more slightly more flexible. So box spread, in the sense what I'm saying here, say January, it is 96,300. So we'll go for, because somewhat wider range you can get, say 1,15,000 or 13,000 put I am selling. So this I am selling. So this is box spread techniques. You can say 1,13,000 put I will sell, and I will go for some 85,000 put buy. So this I will be having. So 1,13,000 to 1,85,000. So 15, 25, 28,000 gap I have given here. 1,13,000 to 85, 1,13,000 to 1,13,000, again 15,000. So 28,000 gap I have given. So 28,000 gap I have given. So I can just have a look here. So here, so this is a part is there. Similar way I can do the same thing here. I can sell 85,000 call also I can sell. So I can buy the 1,13,000, slight very wider range I can buy 1,13,000. So this I can buy. This I can buy. So this part, once you do here, this will have, you can say here, what is the difference you are, suppose for our put options, there is a 15, 25, 28,000 points difference is there between the put option. You are getting 15,000. So 13,000 points are in the risk. So 1 lakh to 1 lakh 13, again here 15. So 15 plus 13, so 28,000. However, you are receiving only so 15,000. So you have a bigger, so this much of money will be in the losses. So what you can do here, box spread, if you want to make these things, so what you can do here, you can add one more lot here. Whatever the call you have added, so you can add one more call here. You can add one more put here also. So after doing this, now this is a box. So call and put, it is a box. Now you go to the daily expiry. Daily expiry, what you have to do, say we are going for 16 or 17. So 16 is so 96,200. So we will be selling 96,200, sell and sell. So one call, one put. So this will be selling. So this will keep on selling. So 100, so 1,000, and this also we can sell it at so 1,031. So call and put both will sell at 1,000. So what happens? We got 2,000. We got 2,000 here. So tomorrow price will not be sitting at 96,200. Price will be something different. So tomorrow it may go to 97, 98, it can come to 95, all these things. But you got only 2,000 premiums or 2,000 time value here. So what you have to do here, because here too also 12,000, but you have made a bigger investment here. You can say so 36,000 of points you have to recover. Out of that, only 2,000 you have recovered. If every day 2,000 point of time value you are recovering, then after 18 days only you will be getting back your strategy will become zero loss. But again you have invested more on call, extra one more put also in extra. So you can say another 20 or 21 days you required to achieve the make it zero loss. So what is your technique? You got this 2000. Tomorrow, wherever, once this is expiring, so how much debit is happening? So say if both are means having zero, so you can say 500 you are less, you are paying only 500. So what happens? Whatever the other money that time you can sell. So if it is going expiring at or on 17th, if it is below 98,000 or it is above 94,000, so you will be making some money out of that. Again you keep on selling 96,200. Say it has gone to 99,000 or 1 lakh. What will happen? This call option will be closing at 4,000. So though this will become zero. So what you can do that time, either you continue with the same strike sell or you sell a strike whichever is giving you the same credit. Suppose closing this requires 4,000 points. You must sell the strikes which will give you 4,000 more than 4,000 points. More than 4,000 points it should give. So it may be the same strike, it may be a different strike. So keep on selling this every day. After 15, 17 days, you will say that every day you will keep on making the things, the time value gain, and you will land in good profit. But it is a very complex setup. So it is not a very easy setup. Don't think that it is a very easy setup. But this has a bigger freedom, means if it is swings between 1,13,000 to 85,000, you can still keep on earning the theta. So that is what you can do. Or you can keep on selling the at the money every day. That also is a process you can do. So sometimes at the money every day also you will sacrifice the delta which will be coming through any of this side will be giving you the delta. But what I will suggest, if you are setting up this kind of strategy, you must keep on selling the daily expiry where the net debit whatever is happening from your hand by closing this daily expiry options, your credit should be 100, 200 point, 300 point more than that. So strikes may change. So think the strategies strikes on that, but and all these four wings will be static till January. You need not have to worry. You have to keep on selling these things every day. So this also one kind of strategy you can form. Nifty and all also you form the similar kind of strategy. So box strategy also you can form. You can butterfly you can form. You can form the Christmas tree strategy also you can form. So wherever the selling, you have to remember that wherever you are doing a selling job, the selling is from the daily expiry or from the weekly expiry, and buying will be from the monthly expiry. So that is how you should operate so that you can get. But one thing you remember, only option involved daily yield strategies cannot be scaled down. The daily yield strategy which involve only options, this cannot be scaled up. You cannot take in bigger quantity. 5 to 10 lot it is okay. 100 lots it is okay, but you cannot go with 1,000, 2,000, 5,000 lots because it has the probability of IV shrinking, probability of erratic behaviors, price behaviors, all things into account. But if you want to take in a very scale up strategy, you want 100 lots of ETH to be done, or you can say that you need 100 ETH, you need 1 Bitcoin to do. So in that case, with the double hedge principle, you can go with that. So what happens? There, these are the scale up strategies. It won't give you stable money you will get, but you will not get a very big losses. In case of a deep correction, excellent profit you will get. So that is also a part you have to understand and go with that. Anybody has any query can I get all fundamental data about the crypto market. Many resources are there, but one interesting resource is coin market cap. This I used to. So what is the uh, uh, so you can what is the circle report this week? if you just, because some AI generated tags are there, so it is giving circulations is USDC. So this is the native some kind of fundamental news you will get in this, but this is more US specific, but that reacts. You can also have a fear and greed index. Fear and greed index in the February March it has gone to 15. Then there is a huge bounce back happen. Now we are at the 16 level. So this is also contra strategy. You can fear gauge is 16. Contra strategy you can take. So so it is falling. You can see extreme fear we have in the March. Extreme greed was in the November. So when that is November 2024 November 21st, extreme fear, sorry, extreme greed and extreme fear. So how to use also, they have given a means scale, so you can uh, follow this also. Many other fundamentals you can get it. Suppose if you want, click on the Bitcoin, you'll come to know what is happening in the Bitcoin. So there are some uh, news you will be getting here, but along with that you can do some search. You can say uh, uh, from there you will get lot of insights. So some people give some technical insights and all, but these are technical insights are very very poor insight for crypto. Rather some fundamental means, in the sense, if there is a you can say uh, what is the, you can say what is the uh, if I want to see coming events. So these are the very, Ethereum is having one upgrade on December 3rd. Definitely if it goes well, it will have a great move. So federal policy decision always affect the market. This also December 10. So all these things will be having a uh, very good effect on the price movement. So these are the things. Have a look on that for fundamentally to understand that. But all in all, if I say, it is a very wonderful instrument for investment, wonderful instrument for trading, but it requires a different approach. It requires a different way of thinking. So it is not only crypto. For everything, you require a different way of thinking for the trade. Trade is not that how you jump or dance or what is the end result as a profit or loss. Trade is more on the psychological part, how you think on a trade. That is very important, very important. So how you think on a trade, it is very important. Sometimes you have to sit quiet, so that will come. Sometimes you need to take action, you have to take action, but always quick actions results in the bad result. So you have to take a calibrated action, you have to take a waiting action. Like here, these two daily yield strategies we have waited. So one is having December setup, another also is having the December setup here, call and put. So nothing to hurry. So we have waited. So 13, 14 we have continued, 13 we made, 14 we lost. So with the same strike we have gone for 21st. So then we'll see on 21st what is the things. Another 5 days are there. So there is a deep correction happen. If there is a bounce back, again back to unlock 5. So pretty good. So these put options, whatever we lost, we will recover everything. So then again we will continue 22nd, 23rd, 24th. We will keep on continuing with this strategy. So these are the things is very important, very important. So how you take a trade. So it should be very smaller quantity, but quality trades you need to do, not quantitative trades. So smaller quantity, quality trades, then only you can make some good winning here. Sometimes some waiting related strategy also you can do. So you can say Bitcoin has fallen now. Bitcoin has fallen now. So if you see Bitcoin has fallen, if I go with the 95,000 say put option of it's 6,900 and December 95,000 I will sell monthly. So monthly December 95,000 if I sell at 5,000 points. monthly. So this strategy, this is also a wonderful strategy. You can take this thing very less and feeble, you can say very protective, very good strategy, but you have to wait slightly longer period. 96,000 it is there. December 95,000 put I am selling. I'll not go with the call. I'll call a bounce back. So here say 100 lot I am selling, and January I am buying 95. So buying the January 95. Great strategy. You can make it here. So if it is 1 lakh 10, so you can, so here make this strategy. When it will give you the losses, can anyone will tell me? Some people, those who have joined the yearly program, can they tell me when it will land me losses? What is the approximate levels? So here 95,000 you have taken, isn't it? 95,000 strike, very clear, because we are in November, we are taking for December and January. Excellent levels are there. So here you can say 7 it is 6,900 level also you can get. So 7,000 level also you can get. I have given the highest level, so it is not a 2,000 point, also a great point here. So here, do remember, while initiating this strategy, do not disturb this strategy as long as price is 1 lakh. So this is the 7,000. So 7,000 add here. Whatever the highest premium, add 7,000, subtract 7,000. 7,000. So you can say till it maintains in the 1 lakh 2,000 to 9. So 7,000 less means 88,000. In this band, if it oscillates for 10 days from here, you can make profit. Just 10 days. From where the profit will come? You must ask me, from where the profit will come? So this is based on the theta. So here 95,000 is having a theta how much? So theta is $50. So every day $50 of decay you can experience in January. However, same 95, how much theta you will get it here? So it is 69. So 950, 69. So $20 gain you are going to get in a day's time. So 10 days if it is there, so 200, if one full Bitcoin is being taken, $200 it will give. But should not hold it beyond that trajectory. Suppose you can say that after taking this, if it is going up, it is good, you can get a chance to come out 1 lakh 2, 1 lakh 3. Good chance you can come out from there. But suddenly if there is a fall happen to 75,000, what will happen? What will happen if 75,000 you have entered at 95? So December, January, end of December you are saying it is 75,000. So that time you can say December, January. Once December is over, January, February will open. Same strike you continue. You did not, you miss one day. But when there is a rising cycle happen, you can make money. So calendar also you can form in this order. So in Bitcoin, calendars are highly rewarding, but same in ETH it is not rewarding. Why? Why it is not rewarding in the ETH? Why it is rewarding in the BTC? BTC never goes to 70 range of IV, but ETS can go. ETS, you have seen that it has fallen to, from 3,700 it has fallen to 3,200 or 3,000 level. I'll not surprise if it is going to some 4,700 also. I'll neither get surprised if it is falling down to 2,500 also, because anything above 50 or 60% of IV, their calendar will not work. 1,12,000, but it will be not rewarding. So here Ratnadeep is telling, if that is the case, why I cannot take 75,000 and 28? Very good question he has asked. In BTC, so BTC, if I am expecting that there will be a 75,000 fall will happen, or 75,000 strike is not there, but he's saying that why can't I go for 82 or lowest strike here and 1,12,000 strike here? Very good question he has asked here. 1,12,000 strike here. So imagine here they are in the It's a very good question. So here 1,12,000, if you just have a look here. So your 3,000 points, 1,000, so 2,000 point of probability is there. If there is a gain happens, means what you want, debit, in debit calendar what you want. This is a debit calendar strategy. So it's a very fundamental thing you have to understand, Ratnadeep ji. So very fundamental question. So when you form a debit calendar strategy, you understood from theta I will make money. But what will happen so that you will get the theta? That is very important. So if you form 95 instead of 95, he is telling if I form at 75,000 put at 1,12,000 call, will it give me the profit? This is why I have not given this part as your debit calendar spread. The reason is debit calendar spread, whenever it is being formed with OTM strike money, deep OTM strike money, it gives the losses because the option what you are selling has very less amount to decay. But if it is falling back, that has all probability to gain more. 1,000 point is there. How much it will decay? But here there is a 5,000 point is there to decay. But this 7,000 is not going to be decayed in the same proportionate way. And do remember, whenever we form debit calendar, must go with the ATM strikes. ATM strikes, because the selling strike will have sufficient money to decay. You have 5,000 points to decay here. Though 7,000 also here to decay. But if you go to other side, you have set 1,12,000. You have 3,000 point which can appreciate. Only 1,000 point is going to decay. So here to also 1,000 or 2,000, 1,500 point to decay. So you can say here, if decay happens, only 1,000 point. But here 3,000 point has to decay. You want quick return. Return should be quick enough. So how long you have to wait, that is also very important. So decay factor, so and this the buying side, this has 3,000 point to surrender, this has 1,000 point to surrender. But if the price goes up, this 3,000 will move to 4 or 5, but this has to move by more number of points. So deep OTM is not considered for the debit calendar. Maybe stock market you would have got something. So as I said to you, don't use that logic here. In stock market, in index or anything, if you are going for 27,000 call, 28,000 call when it is 25,000, it makes sense. But here it doesn't make sense. Why I have not added a call here? Why I have added only put here? That is also a question here. I could have added a call also. 95,000 call also I would have added. Why I have not done that? It's a prior trend, is a corrective trend already happened. From 1,15,000 to 96, I want it should rise by certain points. So then I should make some profit. That is also another point. Simply adding a call and put together, do not think that your strategy is neutral, you are going to make money. That is a very foolish argument. Simply adding a call and put together, if you think that your strategy is neutral and you are going to make money, it is not. You have to take a view. Two ways you can reduce your body weight. But eat less, do more exercise, have a calorie computation. Number one way. Number two way, don't eat anything, only drink water. That also will reduce, but that also will kill you. So you neutralize that. I will not take any food, only water. Then I will reduce my. Yes, no doubt, you will reduce the weight. Quickly you will reduce the weight, but that will also kill you. Similar factor. some views has to be taken at any point of time. Market, you should not be neutral always. So neutral, you have to take a view. You may be going wrong, but if you see, my experience says one group of traders I experience, those who are always bullish. If any index is falling also, they will say that no, it will go up. They make success. One group is there, those who are always bearish. Anything you get to know, it is valuation is stretched, it will have a correction. They also make money certain times, or they make money also. Their positive return comes. The reason is they keep on hedging, their mind has matured to that one point of time I will get. Let me 110% of the year it should come, I will get. Or if you say 48 or 43% of the days in a year is downtrend and remaining days it is uptrend. So when there is a downtrend happens, these people are very, very optimistic that further fall, deep fall will happen, they will make a good money. Similar way, those who are bulls, they make money. But in between, neutral fellows only suffer. They don't make money. They don't have a view. Like a crossroad, they are standing. They do not know whether they have to go right or left. They're just standing there. They're feeling safe. So they're feeling safe. They're standing there. So they don't make money. Not only that, same for your career, same for your job, same for everything. Person who has never taken a risk and person who has taken extreme risk, if you compare between that, I will choose the person who has taken the maximum risk. So that doesn't mean that it should be a foolish risk. It should be a calculated risk. The risk should be computed, calculated. Risk should be estimated, but that should be taken. So it may be 5 attempt he can fail, but a 6th attempt may recover back everything for him. So that is should be there. So that also one great part you have to see in the trade. Great part. This is a very great experience on the trade. That doesn't mean that I am not saying that you sell all your land, house, everything and put everything in trade. No, not at all. I never advocate even your investment should not come to your trade. Any money what you have invested in mutual fund or stocks and all, don't bring it to the trade. That is a separate basket. This is a separate basket. So do not bring that money. That part I am very, very clear, and that ethics I personally maintain. You trade money, you lost, wait for the money to come in some other way. Don't pull your investments to there. You wait, you'll not do the trade for a couple of months. Let it be 1 year, don't trade. What is the when that money comes, the money what you can able to lose, that you can put in trade. So don't put your other basket money here. So that is very important. But similarly, risk also important. So when that money comes, you need to take a view. My view, market will go up. My view, market will come down. So based on that, I will engineer my trade. I will engineer how long I can hold that. Everything that depend upon how you engineer your trade. So this part is very, very important. So here you will say that if that is the case, why I have found this daily yield? It is daily yield. I am very pretty sure that I can make some money from the theta decay. That's why call and put are important. But when it comes to this strategy, which I said that it is a scale-up model, those who have joined the February program, what happened? The day we have started February program, it was 3,300. And end of February, when our program has progressed by 15 days, this was at 1,700. Then again you have seen by end of October, it is 4,700 level, it has gone. This has happened. So what could be the best situation we would have capitalized? Those who have couple of traders capitalized that. That's why I'm telling. One trader I know who was a part of our program, he entered 1700 level, it was there. So he was telling, I can hold it, so I have no hurry to come out. So in this, so what he did, he was put and all, he was coming that once it has come to 1700 level, he said that rather has it a put and forget it for a couple of months. Then it has gone to 2300, 2400. So then his scale of the put continued, and to my knowledge, he has closed only at 400 level. So his views was very clear. Then he has not gone to the daily yield at all. He said that daily yield is not rewarding for me in this. I made couple of days, I earned money. Say from here, I have taken these positions. Say after 5 days, if I am observing that it is coming down to 2000. Though I will bring down the put, do you want me to sell the call? I will not sell. I will wait. Let me wait for a couple of days. Let it be 15 days, 20 days, 30 days. But from here, if there is a 30% gain is coming after a big fall, that is a great money I can earn, which I cannot make it as a make it from the daily yield at all. So this kind of things also is depend upon this thing. If you make it as a textbook rule, so I brought the down the put, again I sell the call, that is a textbook rule. Continue in that. Sometimes you have to go beyond that textbook rule. What I did here also, similar things I have done here. Yesterday also I was showing you future here. Here I'll go to the future. I told you this is a entry made 3700 level. When it has 4000 crossed 3700 level. So then along with that option hedged, option I am in the March, not along with this. What is the hedge? Yesterday I was showing you 3600 March 2026 put is bought. But it was not originally 3600. I have gone with 4000 that time, 4000 put. So it has fallen. I booked it, taken 3600 that time. Then along with that, yesterday also I was having double hedge with the 3000 put option I was having. This I closed yesterday. So this put I kept, and along with that I said that okay, it has enough correction happened. So let me take a pure put buy, rather add some ratio put spread. So this ratio put spread I have added. So this ratio put spread I have added and taken that December 3000 put options out, and I have this ratio put spread with 3600 put and future also there. So this is why I have taken June month. I have a long term goal for that. I do not want to come out with this at 4000 and all. I am aiming that you should go to 5500 plus. That is my aim. So that cannot come for overnight. For that, I may have to wait for the June. So for that, so it is, you can say whether it makes sense, makes very good sense. So you can say if you are going, whatever the money you are putting, if you are going to get almost 80-90% return, so nothing wrong in waiting for 6 to 8 months time. So this kind of setup also you can form. So here you can say that why I have not scaled up bigger, but not required this much of money I put, I made these things, that's all. So that is also very important. How you should treat your trade, how you should think about your trade. So already two puts I made the money. Two puts I have oscillated, made some money. Further, if it falls, I will make some money. Only IV has gone up, so I have not closed yesterday. Otherwise, if IV would have maintained, I would have brought the things to 3100. I said that if I am closing the 3600 put now, IV is at 100 level. So whichever the option I will buy, that will be much costlier. So why should I close? Whatever existing I have, let it continue. Let it fall further. We will see at a 2500, 2600 level. We can have a look at closing that put. If it doesn't happen, let it be. So this kind of thing also you can have. Only one ETH future I have hedged it twice with one ratio put as well as one this. Earlier it was a two puts was there. So two puts, twice I have made that things. So I can, but that trades it is not pulling. So here you see this part I have sold yesterday, which is 100 level I have taken, 200 level, $100 I made out of that. Earlier also that 4,000 I am not uh, that is one position may be there for 4,000 puts. So this is also as 0.5 was that. This is with respect to a different strategy, but this 700 level I have entered, 1000 plus level I have quit that and gone to 3600 put. So that is also I did. So this part is very important, how you trade your trade. Means almost $400 I have taken. $400 if I taken out. So you can say whatever the M2Ms it is coming now, $400 means near to 35,000 I have got it. This is 49 is there. So remaining whatever if that uh, put I close, I can get back all my M2Ms or losses here. So for that also you have to think in this order. So it should not be always daily yield. It should not be always strategy or trade. Sometimes you have to think in the investment point of view. So which is giving you more reward if you can wait for some time. So plan should be very forward plan. So I am going to meet up 20,000 2026. So till that point I have kept my view till that point. And how much I have kept the money here, that is also very interesting. People may be thinking that this is how much money I have kept for this position. What is my liquidation price here? You see, $1,200. Till this point, I have kept the money. So why I am hurried to close that put and all? I have kept the money till $1,200. If it fall, then only I'll touch my put or else not. Maybe below 2,000, I can touch once again, touch one more time like that. So you have to prepare in this order if you want to make big money from this crypto. So this is how it should work out. So first, which have to be scaled up and which cannot be scaled up, when you should stop daily yield and wait for some times without any change. Volatility increases, IV increases, deep correction, deep rally, that kind of things. So whichever the things is involved with future, you can daily yield, you can have double hedge, you can have on for a couple of days. If it is adversity hits, then sometime you have to wait. So these are the scale up models you can have. Sometime monthly strategy also you can form. So categorize all your priorities, categorize all your uh, expectations, accordingly work. It will be a wonderful trade experience. When index was 26,000, he has initiated. Means much before, maybe 1 year before, 26,000 plus. Then index fallen, he has not started and things. He'll go some 3 month, 4 month ahead the line, 2/1 ratio call spread. Index fallen 24,000. He has gone to, I'm saying that in the month of, when it has fallen 24K in the Nifty, that time 3 month ahead line, he has gone for 24,000 strike. So again index fallen to 22,000. In this year, you have seen that 22,000 below it has come. He brought it to 22. Every 2,000, 3,000 point, 2,000 point down, he was bringing only ratio call spread. So now you can say index is 25,000. What you would have done and what he has done, I'll tell. If you are in his place, what he will do? One failure he got here, second failure he got here, third time he entered here, which is in success now. What he will do? Answer. What you as a trader will do? He got twice failure. Fail one, fail two. Only 2/1 ratio call spread. Nothing else. Tell me what he's having currently with the 21,000 and 22,000 call 2/1 ratio spread for December. Currently, you tell me what he will do. definitely 90% of you will close it. 90% of trader. A 2 times failure, that failure has taken your space, mind space in such a way that you will close. This man is not going to close. His aim is 30,000. Yesterday, last Friday, he was telling, sir, I am not getting for the March 21, 22 strike is not active. I said, wait for December. In December, if it is not open, what I should do? I said that you can go for 22, 23 if it is there. No, I don't want to quit this. I have find out at the bottom perfectly. I don't want to quit. My target is 30. 30,000 above I will close it. Let it come after June 2026. Let it come December 2026. I don't bother. My target is 30. Same, only one ratio spread. No changes in his style. So these are the, and this one thinking has developed his